Good afternoon, everybody. Andy Phillips here, and as you can see, I've got Mark Barrett on the line as well with me. Hi, Mark.
Yeah, hello there. Hello, good afternoon.
And when your handsome Fizzog is on the line, what that means is it's tax time, and we like tax time. But there's a lot of things that we sort of have gone through over the sort of previous weeks about all different types of aspects of sort of tax and VAT and all those sort of things, which is we've got a lot of good feedback from. I think it's because a lot of people sort of stick their head in the sand with this sort of stuff.
Yes.
I know I do a lot of the time. But some of the things we've been going over have been incredibly interesting for the sort of the property investor, property business side, which has been good. And one thing that sort of comes up again and again and again and again and again, and it's sort of we talk about subjects and we say, look, really got to go back to the basics and sort of think about what structuring the business in the first place and getting it right from day one and all those sort of things. So guess what we're tackling today?
Yep, that's the one.
Structuring the business. It's been something that we've been sort of talking about for a long time, but it is incredibly important. So, what is going to go into this presentation? What's going to be covered basically in this presentation?
Okay. The reality of this one is, as always with these presentations, I'm going to go skimming across the surface, but I'm going to do what I always try to do, is give you the questions to ask.
Yeah.
I want you to start to think. I'm not going to try and use any of the words from slides, so I'm trying to be careful now. I just need people to think and say, yeah, that's a good point. I'll think about that when I talk to my accountant or when I do my planning or whatever you're going to do. Think about some of the issues we're going to talk about today.
Yeah.
For those who are watching who think, oh, Mark's about to tell me how to set my company up. No, I'm not, because I'm not giving you personal advice on your circumstances. So, sorry.
I mean, that's the important thing, though, isn't it? It's like, the whole concept of this is that it is a personal thing. It's where your situation is right now and where you want to get to. So It can't be a generic.
Every single person listening to this broadcast now or in the future, your circumstances are different. They are unique to you. And I'll be covering one of these in the slides and just some other questions. And they're literally, it's going to look like a page full of words. It's only a part of it. You're all unique and your circumstances are unique, and you need an answer that's unique to you. It's got to fit you. So that's what we're going to try and do.
Cool. Excellent. Okay. So do you want to share your screen, and we'll put your presentation up and I'll share your screen.
Good. I think I've just done that. Have I done it right?
Yeah, just put it up to full. There you go.
Are we on?
Yeah, just put it on now. There you go.
Great. Okay, so that's what we're talking today, structuring your business the right way. I just spoke with Andy before we went live and said, I know I get passionate. If you've listened to these broadcasts before, I get passionate. I am passionate about what we're doing. I think if you're involved in any business, I don't care what your business is. For us, it's property. Passion is essential. So we're going to be talking about structuring your business the right way. Little few words there. If you fail to plan, you plan to fail. We all know the adage. I think it applies. And I often say to people that you've really got to take some advice. I've given presentations on this topic literally all around the country and around the world. And people have said to me in presentations and said to me on forums that, hang on, Mark, you're only doing this because you want to sell some time. So what I thought I would deal with, even before I get to all my other slides, I'm going to mention the elephant in the room. Okay? People think that when the accountant says, oh, take some advice, it's because the accountant is just trying to sell an hour's consultancy. All right? If any of you are thinking that, all right, rubbish. And if you could just think about this just for a moment, you will know that the second sentence I've just put up there is entirely true. If the accountant just lets you get on with it, you go and DIY your formation, just get on with it, make a mistake, and it will cost you more. The accountants will make more money by helping you overcome the mistakes. So when I say to you, take advice, it's not because I'm trying to sell an hour's consultancy. I'm trying to help you. A phrase you've often heard from me: avoid being penny wise and pound foolish. And I thought I'd give you an example. So this is a real life October 2020 example. Chap's come to me. He wasn't my client. He's now come to me and said, Mark, look after me. I've got this company, that company. I've done this. I've got developments. I'm doing all sorts of things. I've got JV partners. We're starting to build the company for time. Really? You can't do that. There's a law against that. We're borrowing money. What? You're borrowing money from the company? Well, perhaps I have to take it as income tax, pay income tax, take it as salary. Okay. So even at 20% tax, income tax, if you take it as salary, you're paying 20% tax plus 12% national insurance plus 13% employer's national insurance, 45% tax. Oh, I can't do that then, Mark. What do I do? I'm fixing his problem for him. He has said to me, Mark, I wish I'd taken advice right at the beginning. Yes, if you'd taken some advice right at the beginning, great. The bill he's paying me to fix everything that he's cocked up is £6,250 plus VAT. So I promise you, take some advice now. Don't be penny wise and pound foolish. Take some advice now. So that's the elephant in the room. If any of you still think I'm just selling you something, I'm not. I'm just trying to help you. Okay, let's get on. Introduction to us. I'm a chartered accountant. I am a landlord, commercial and residential landlord. I was a property developer, so I walk the talk. Mid-sized firm is 40 odd of us now. I don't actually know how many staff there is. I think it's 47. Important. Presentation I provide today is not professional advice. You must not take action or refrain from taking action based on information I provide. It's a general introduction, and you must take professional advice based on your precise and personal circumstances. I'm sorry, you need advice. Structuring your business, the fundamental question. Don't be focused simply on how do I make this deal work or even what's right for me today. Any of you listening who used to talking to me, you know I use adages and I use the same phrases quite often. Property people, I think, are notorious for looking at their feet. I want to do this deal. What should I do now? What's my next footstep? They're looking at their feet. What I always say is look at the horizon. If you can look at the horizon, now I can tell you where to put your feet to walk towards your target. If you don't look at the horizon, I can tell you what to do for this deal, but I don't know that it's right because I don't know where you're walking to because we haven't dealt with the horizon. Lift your eyes up, everybody. Look at the horizon, walk towards it, and now we can structure accordingly. So, the business planning process. I'm going to speak at this rate. There's a heck of a lot to get through. Hopefully, I'm making sense. The business planning process. Again, clients, we've gone through this, will recognize some of these words. These are actually words off my emails to clients. I always describe that I think there's 3 steps in the planning process. Step number 1, horizon. Sorry, it is horizon again. You define your end destination, whatever it is. Now, you can see I've got a few words there, retirement, passive income, whatever. I'm going to be spending a little bit of time on that topic for you presently. So this now says, this is the target, this is what we're aiming at. Good. So once we've got the strategic target, now let's have a look at the individual business plans. I say individual business plans because we need some clarity of where are you now and how are you going to get from here to the end target. It might be that it isn't just I'm going to buy some property and then I'm going to become super rich. You might be, how do you get deposits? Might be, how do you get your consultancy business, IT business, whatever it is you do, to pump prime and accelerate your process? I don't know because each one of you will have different scenario. But you're developing individual plans. Some of them will start later, some of them will start now. How do we know, how do we get from where we are today to where you want to be? And if you can get that part sorted out, the next question is, well, what do I do now? What's my implementation plan? This is so logical. Those of you who are in business or employed in a sort of fairly-ish senior position, you're doing this sort of stuff every day. Whether it's as an IT contractor, you need to think about what's the end target, what the client wants, this computer system, how am I going to do it, what am I going to do first? This is basic stuff. But so many property people think it doesn't apply to them. It does. It's just business. apply it. Let's imagine you want assistance with this. Yep, you're probably going to talk about a couple of hours worth of work. Does it not seem like a good idea to actually plan what you're trying to do for the rest of your life? I think it does. So the business planning process, I think, is an essential step. Okay, this is the big one. I've taken these words, basic premise. I actually changed the slide last night. There was a conversation, and there was a dear lady on the forum who was asking me exactly that question. I've taken her words. Isn't there a basic premise in making a decision on your business structure? The one that always comes out on social media, but surely you need a company when your income gets to 40% tax bracket. Surely you've seen this comment. Everyone trots it out. For me, it's the tax tail wagging the dog. It's important to think about this, but is that all there is to it? Well, let's imagine. Let's imagine actually you answer the question saying, well, I want to have £100,000 a year income from my business, from my property business. You're on your own. You're an individual, not a couple. You're on 100 grand. You've got enough money now from inheritance, whatever. You're going to pay some deposits out. Great. Should you do it in a company or should you do it in your own name? Well, if you're taking the cash out, 100 grand a year, you're going to take all the profit out. Well, why would you do it in a company? The company's going to pay tax at 19%. So there's only 81% left. And then you're going to take the dividend from that and you've got to pay income tax on it. You will pay a little bit in salary. Yes, you'll have some tax-free. There's some tax-free allowance in you. I know, but you still got to pay tax at 32.5% on a significant chunk of this money. So you've got double taxation. So the person who wants all the cash out of the business and they're just going to set it up and let it run, probably is going to do it in their own name. Yes, Section 24 is going to hurt them, but they want all the cash. They don't want to pay tax twice. Corporation tax and income tax. Maybe they don't. Lots of reasons. So this is the one that's trotted out all the time. I agree it's important. I'm not making light of the fact that this is important, but I think there's some other questions. Let me share with you some of the other questions. And this is only some of them. Let's just work through a few of these. I'm going to spend a little bit of time on this because this is the bit that I really want to get across to people.
Yeah.
This is the stuff that you need to be thinking about. What age are you? If you're 30 or are you 60, doesn't that make a difference as to what decision making you're going to make about risks and business? Does it make a difference whether you're married? Is the relationship stable? I've dealt with one this week where the chap has formed a company. It's his money, and he wants, and his wife says, it's your business, dear, you get on with it. He doesn't want to put any shares in her name. He's not actually sure that the relationship's that stable. What other sources of income have you got? Multiple streams of income, is that a phrase we understand? Are you going to have more? Tell me what your plans are. Do you remember in the business planning process, we talked about several businesses, potentially, several streams of income? What income do you want? When do you want it? Is it just for you? Do you want the kids involved? What ages are the kids? What about if you get your kids involved? How the hell do you protect yourself from your kids? So you put your kids into shareholding, for example, in a company, and then they get divorced. What happens then to the shares and the value that the kids got? What happens if the kid starts gambling? How do you protect yourself from your own children? Who are the owners? So shall we put the kids in? Where do they live? Do you got anyone that's abroad? Are you going to go abroad? When you're going to retire? Are you going to retire in this country? Can you just see that all of these matter? And there are so many more. I know I'm passionate about this, but hopefully I'm getting the point across. There's more to it than, are you a 40% taxpayer? That's important. I agree. Tax is important.
I think a lot of people sort of want a just one answer to things sometimes, and what we've learned by doing a lot of these lives over the last few months, or maybe longer than that now, you realise very, very quickly there is no one answer. It's all about where you are right now, where you want to be, who you are right now, who you may be in the future, and there's loads of different things, loads of different scenarios that come up, and every single scenario has a different answer to it.
Absolutely right. I've just dealt with one there, health issues. Is there anything hereditary? This week, literally, I've dealt with 2 investors who've got inherited health issues. One has actually had a cancer diagnosis. Damn, do you think these things weren't important for us to deal with? The list is enormous. So when you see it on social media and someone asks a question, then everybody jumps in and says, oh, it's 40%, kind of company. You'll notice that the accountants never answer. The accountants don't get involved in that conversation because we know we don't have enough information to actually answer you. But if we say that, people think we are self-serving, and we're not. We just can't answer you.
But see, this is the thing, though. I mean, you say that it's very difficult. I've seen sort of some of the things that you put in that you're saying it's very difficult to answer that because of X. And it seems like people aren't really sort of happy with an answer where you say you can't answer it because of those reasons.
Yeah,
they just want something that's very, very easy, very clear, very quick.
They want binary choice. Yes, no.
Yeah, just one answer to a very, very complex question. And I think that this is the point that we got to make. That it is really, really important that it is not easy to just give a very, very simple blanket answer. Like this basic premise concept. In this sort of situation, because every single person's different. I know we keep on banging on about it, but it is absolutely 100% true. And also just talking about the person that became ill. This is something again which you could legislate for, and you have to turn on a sixpence and you have to reassess the process and what the outcomes are going to be for friends, family, business colleagues, the company, the properties involved and all that sort of thing. When something like that happens, something can happen which is terrible, like cancer, which is terminal, and there's going to be a sort of a time frame that's got to be considered, and who's involved and what the implications and all that sort of thing, and things could change completely on that point.
And it does, and the problem is, without having had the planning process, you get yourself into a blind alley. I'm dealing with one. I'm not going to go into immense detail, but this lady has got a diagnosis. She's in remission, thank God. 2.5 years ago, she asked me to come up with a plan, and I said, "Not easy. We'll look at it." Someone else said, "Yeah, it's easy." So that's fine. So she can stay with us, but engage with them for a planning process. 1.5 years later, they still haven't done it because it wasn't easy. They couldn't get a solution to her problem. It's now back with us, and effectively we're just pressing the button again on the same work we started 2.5 years ago. But now we're 2.5 years into cancer. Thank God she's in some remission at the moment. Just get some thought process going, folks. Sorry, I know I'm pleading with you now, but this is what you need to be thinking about. Okay, let's crack on.
Yep.
Okay. This or that. Initial decision. So there are 2 initial decisions that you make. Are you going to trade in your own name or in a company? And everyone thinks it's binary. Sorry, maybe it's both. So let's spend a few minutes on this one. This week, literally, this week, Monday, someone's gone to the MMA, fantastic course. If you're going to have a tutor, use Simon, he's brilliant. Done the MMA, come out and said, right, okay, so I've decided I'm going to do a company because I chatted with lots of other people online, and they're all doing company. I want to do a company. Oh, good. Why? Why do I want to do a company? Well, everyone else is doing a company. Okay, but why do you want to do one? So we've chatted. In this instance, he isn't working. His wife is, and she has good income. Well, have you ever been a landlord before? Do you know anything about being a landlord? No, I went to the MMA though. It was brilliant. Why don't you just do a property in your own name for now? Perhaps tenants in common with your wife, so that we can get her on the mortgage because we need her for the mortgage. And why don't you just learn whether you like being a landlord? Have one in your own name. You've got £12,000 tax-free allowance. Let's use that up, shall we? So About 30% of the people that I talk to about own name or company, about 30%, I go through a process with them. Again, clients listening will smile at this. If you've been through this, I have a soccer match. This is an analogy I use. We have limited company versus own name football club, and we have a soccer match, and we talk about this, and we see which side's scoring goals. Now, sometimes it's Liverpool versus Watford, and we're 5-0. Sometimes it isn't. In this chap's case, it wasn't. The answer was, well, let's put the first one in your own name. Let's see if you like being a landlord. It's not going to cause you any problems, Section 24, anything like that. Don't worry about it. And then we'll think about a company. So actually, his answer was both. Not one or the other. It was both. Don't assume just because everybody else is using a company that it's right for you. About 30% of all the people I speak to end up trading in their own name. However, 70% go into companies. So I'm going to talk about companies now. So I'm going to go with the majority for now. Rest of the presentation is going to be about a company. And certainly if you're a masterminder, for example, you want to get involved in that level of education, which is phenomenal. I was a tutor at the mastermind. Yeah, you're probably going to use a company. I can imagine you probably will, but I don't know that, but you probably will. So let's talk about a company. So if you're going to trade in a company, you got another question. Do we want a group structure or not? Now, it's a bit difficult for these slides because actually it's the next slide after this one where I'm going to go into the group structure. So you just have to imagine right now, I've got a group structure. So that's a group company owning subsidiaries. So bear with that. You'll see it in the next slide. There are advantages of a group structure, which is that you can move money tax efficiently between subsidiaries, and you can protect your investments from your trading activities. So let's got some good advantages. But it strikes me, life is full of yin and yang. If there's a plus sign, there's a negative. Life has got balance. So wherever I can say there's advantages, there are disadvantages. Again, I am the type of accountant that will always tell you the disadvantages. So, big one. There are the group structure, human at the top, then a group company, then subsidiaries, 3 layers. It's deemed hierarchical. So there are less lenders who like the hierarchical structures. Right. Now, there are more this year than there were last year, and I suspect there's going to be even more next year than there are this year. So it's a problem that's going to drift away over the passage of time, as all these problems tend to do. But here you go, advantages and disadvantages. So what I thought I would do now is do some work on strategy, structuring. Okay, so first of all, do you all understand what a helicopter view is? A helicopter view is you've walked out to the helicopter, you can see every blade of grass under your feet, you get in the helicopter goes up and up and up and up and up. Now you can see that there are trees, but you couldn't tell the difference between an oak tree and a birch tree. You're so high level, so it's a high level view. So you can have a company, which I will call an investment company, which is basically you've got lots of assets in it, and hopefully the human isn't working too hard. It's that thing we all hope for, which is the passive income model. So it's your buy and hold model. By every HMOs, BTLs, commercials, you might own SAs in it, but not operate them. You might own the SAs there. So it is your investment model. Now, your lender is going to insist that this company is an SPV. SPV, I use the phrase single purpose vehicle. It is a company formed for a single purpose. Its single purpose is to buy and hold. That's it. That's all it does. It's a single purpose vehicle. And all it does is buy and hold. Now let's look at the next business. Now the next business is the reverse. Look at it now. It doesn't own any assets, but the human's working quite hard. So this is typically your do strategy is what I call it, your do strategy. So if you think about the guys who don't have the cash, but I want to get involved in property, I want to make some money, and once I've made some money, I want to buy property. So it's your deal packaging, deal sourcing, perhaps letting management, bit of rent to rent, maybe SA. Could be, actually, it's your IT company or your, whatever it is, other company you've got. Right. I do need to explain some English to you in a minute. My English by comparison to the taxman's and Simon's, so bear with me for a second. I'll do that in a moment. I've got a third company I'm calling Trade. Now, your ears might be pricking up saying, hang on a minute, I don't understand trade. Let me deal with that one now. Simon, quite rightly, one of the best trainers there ever is, talks about two options, investment or trade, only two, investment or trade. The taxman says investment or trade, just two. Mark has invented this third category called service, and I'm using the word service to try to describe to you the different type of business, because I am using the word trade by way of tradesman, dirty hands. So this is where you buy and sell, flips your new builds. So at this helicopter view level, we've got buy and hold, do, buy and sell. Now I think, realistically, at a helicopter view level, every single property strategy you could ever think of fits in one of those three. Now, as you lower the helicopter down, you can end up with some divisions coming in. So I want to deal with that in a moment. But having said there's only three, actually, bit of a fib, there's a fourth. It's a group company, or I've called it in this case, holding company. Don't like that phrase. I'd much rather I'd use the word group, but never mind, I've used holding. That is again an SPV. That simply holds ownership of the subsidiaries. So now visualize you're sitting above the holding company second, the active company's the third, hierarchical. The reason why that's an SPV, that company must not trade. So keep that on screen for a minute. I just want you to think about this now. Let's imagine that you're flipping. You make good profit on flipping. I did. You make good profit on flipping because you take risk. But risk means you could actually lose the bet and you can lose business. There's a slide I'm going to be putting up in the forums later on about this exact topic. Well, at the moment, if that structure happened, providing that no one's guaranteed what's happening in the trade company, if the trade company got into problems, we can liquidate it and everything else is safe. If, however, the holding company starts to become active and it gets into trouble, everything below it is forfeit. So your top co is the thing that you protect. You don't trade in that top company. Okay with that?
Yeah.
So I've used SPV. I think the investment company is an SPV. I think the holding company is an SPV. I think the trade company is an SPV as well, because it's got different taxes in it. It's got CIS, Construction Industry Scheme, CITB, Construction Industry Training Board Levy, CIL, Community Infrastructure Levy, blah, blah, blah. It's got so many extra rules that you ring fence it off. It's got VAT issues, all sorts. So the only one that isn't necessarily an SPV is that service company. So what you could do, you could try to put, I've got 5 examples on there, haven't I? Rent to rent SA, deal packaging, sourcing, letting management, 5 options there. You could put them all into one company. But as you lower the helicopter down, your accountant might well say to you, well, hang on a minute, your rent to rent at the moment is certainly VAT exempt, but your rent to SA isn't. Actually, that's got very specialized VAT rules. So actually, I'd like those 2 in separate companies, please. Oh, hang on, a deal packaging, deal sourcing, massive amount of regulation in there. Might want to ring fence that activity from everything else because it's so tough. So perhaps we put that in a third one. Oh, lettings management. Well, that's a bit like rent to rent. We could put the letting management into rent to rent. Oh no, but lettings management is vatable. So you start to see, as you lower the helicopter and you get into more detail, you start to see that things are difficult to combine, but maybe you combine them to start with.
So this level, it's that you really putting these sort of businesses into pools, into sets.
Well done. Okay. Again, people that know me know my language. Dog, cat, rabbit. The investment company is a dog, service company cat, trade is rabbit, dog, cat, rabbit. Why would you put a dog, a cat, and a rabbit in the same hutch? Don't. Keep them separate. That's all it is. Just keep them in separate hutches. When you get to your service company, my example, cats, do you want to put your Moggy in the same kennel as your Siamese and as the same kennel as your Manx cat? Don't know. Maybe not. Maybe you do. Maybe when they're small, you can put them together, but as they get bigger, you might want to separate them out. So separating them out.
Analogy, actually.
Yeah, well, sorry. I use analogous language all the time simply because I'm trying to be a communicator, not just a boring old accountant.
It's a good analogy. It's a good analogy. I like it.
Think about your incubator business. Now, you can't Google search what is an incubator business. It's Mark's language. It's my English. But maybe whilst I've got a Moggy, a Siamese, and a Manx cat and their kittens, I could put them into one hutch. That's my incubator hutch. And then I'll take them out later on. So that's just some of Mark's words. A huge topic on its own right. Haven't got time for it today, but I just wanted to preface it that there is an option. I could put some of these activities together in that service company because it isn't an SPV.
So the idea is that from a sort of tax and legislation and everything else point of view, say with the service side of this, you could start them off and try them out a little bit in the same company, but there's going to be a stage when VAT regulation is going to be different, legislation is going to be different. You just pull them out as you go. So as you grow, you'll pull them out and into different businesses.
You and I always have this problem that I'm meant to be talking for half an hour and I always overshoot. Can I steal 5 minutes?
We're happy to do a 45er.
I'll steal 5 minutes. I'm going to do the incubator analogy. Hey, folks, you've got to listen to Mark's incubator analogy. Okay. Remember, this is Mark trying to be a communicator. The incubator analogy is we've got to have clarity of intent. Reason is, let's imagine we've got 3 businesses. Let's imagine we've got rent, deal packaging, lettings management, and rent to SA. All 3 of them are VATable. Let's imagine we've put them all into the same company. They're all turning over 30 grand a year. You've now got to £90,000 of VATable turnover. You need to VAT register. Can you just imagine that you've put 3 things together and none of them are that big, but they've touched you over the VAT threshold. You've got to VAT register. Then you say, hey, Mr. Accountant, can you split this for me, please? Well, there's a bit of tax law called disaggregation. Disaggregation. Where the tax man says you've artificially separated them. They live together. They still look as if they live together, still run by the same people, the same computer, the same bank accounts. Damn, they're together. And you cannot separate them out. My argument would be, well, if I've got intent and clarity of my intent, so right on day one, I say, look, I'm going to put them together, but I'm only going to put them together temporarily because it's an incubator. And my incubator is, I've got a company, and in my incubator, I'm going to put some eggs. Now, the eggs, of course, in my analogy are ideas. I'm going to put 5 eggs in my incubator. Lo and behold, all 5 eggs hatch. Good. I've now got 5 little fluffy things. Now, the little fluffy things are so small, they cannot live on their own. What do I mean by that? Well, let's imagine they're turning over 5 grand each. How the hell can you afford a company and afford accountancy and all the other stuff that goes with it for a 5 grand business? You can't. But 5 of them together, yes, they can live together. Now, let's imagine one of them starts to grow and it gets big boy feathers. So let's imagine now deal packaging is growing. Wow. At which point you can be justified in taking that big boy out and leaving the rest in the incubator to put more ideas in. So you can use an incubator company and take stuff out when it grows, but you cannot do it to escape VAT. You've got to do it for a bona fide commercial reason. Commercial reason, I think, is fairly obvious. If you've got one chick in your incubator with big boy feathers, it's going to squash all the little fluffy things. There's your commercial reason. Obviously, justify it into business speak rather than Mark's analogy speak.
So if you do that, can you do that at the time when you realise that it's got to that stage and go and do it, and that's a justifiable reason because it's got to be big for the incubator, let's say?
So I tend to use that 30,000 number. Sorry, I know I've interrupted you, Andy. I do apologise, my friend. So let's imagine I've got 5 things in there, each of them at 5,000. I've got one of them at 30.
Yeah.
I will want to take that 30 out.
Mm-hmm.
Now leave the 4 babies in there. And let's see if we can make another one of them into a big boy as well. And we'll get that one out. So the point of the incubator is simply to grow, to hatch your little ideas and see if you can make them grow.
Yeah, the question was really, can you do that at the time? So you don't have to sort of put that in writing that you are doing this right at the beginning.
Yeah. No, I want it in writing. So if I'm forming this incubator, in the correspondence between me and the client, and please try to let the accountant do the correspondence because he does know what he wants to say. I will say, we have created this company called Andy Service Company, and we've created it to be an incubator so that we can use it for, and I will be explicit in what I'm trying to achieve.
Right.
And that we will take stuff out when they get to a prescribed size.
And so that consequently, the tax guys can't actually go and say, what you're doing is you're doing this disaggregation. You've already planned to do it that way, so it isn't a disaggregation, and they can't stop doing it.
No, I've got clarity of my intent. I've stated my intent. I've got clarity of my intent, and all I've done is for my commercial reasons. It must be commercial reasons. I'm doing this. So if you can imagine, I've got 4 things at $5,000, and I've got one at 30. I'm only at 50. I'm nowhere near the VAT threshold.
Yeah.
Taxman can't lose on this one at all. Now, take it out. What it does mean, sorry, I'm spending too much time on this topic. But
no, this is good. This is good because this is really interesting. This is the sort of things that people really need to understand.
What it does mean is every contract you sign, so your rent-to-rent contract, your rent-to-SA, your deal packaging, your sourcing, your lettings management, whatever it is, every contract must be assignable. Because this is only an incubator. At some point, you're going to take the big boy out, and therefore you don't want to have to renegotiate all your rent-to-rent contracts. You just simply want to notify the owners of properties regarding the contract between us. As you notice, this is assignable. I've created another company purely to look after this because it's so successful. I love working with you. I've assigned your contract. Statement of fact. I've done it. Don't ask, tell. Okay? Make sure your contracts are assignable.
Yeah.
Okay with that?
Yeah.
That's incubator. Sorry, I didn't really mean to get into me being passionate about chickens now. I've been passionate about dogs, cats, and rabbits, and now I'm doing chickens. Okay. If you stick with this picture for a minute, I know it's been on screen a long time, and I apologize for that. The question then becomes, I've got this holding company, Mark, and I can see that eventually I might want to have a holding company or group company. I prefer that phrase. But you did tell me there's disadvantages, Mark. Can I do without a group company for now? And can I put a group company in later? Well, that's a pretty reasonable idea. And this is going to be my final slide of this little presentation. When to insert a group company into your structure? Look at my little pictures. I do like finding these little pictures. If not now, when? Okay. Now, the benefit of the group structure is to pass assets tax-free between the companies. So when do I need a group company? I'm going to stop for a second. I didn't talk about property. So I'm going to go back a slide. So the advantages of this group company. Stay with this. Let's imagine now my trade company. I'm successful. I've done some flips. I've made 100 grand. Well done. You have to pay tax. Can't stop you paying tax. You pay £19,000 in tax. And my job is to minimize it. And I've worked as hard as I possibly can, done all my magic, and I've made it as small as I can. You've still got 100 grand profit. You've still got to pay 19 grand tax. You've got £81,000 left. What do you want to do with it? Well, you've got a job. You don't need the money. So fine. Your trade company, which has made this 81 grand, will declare a dividend. It will declare a dividend to the person that owns it. Who owns it? Well, it's not a human. It's a company that owns it. So the trade company, in my little example here, declares a dividend to my group company, £81,000. Now, the group company's now got the money. It looks at the person above it and says, well, you're okay. You've got enough money. You don't need any more Gucci shoes. You don't need any cash. What am I going to do with it? I'll tell you what I'll do. I'll stick it in my investment company. So the 81 grand has now moved from the trade through the group and ended up in investment. Okay, that's called another deposit. So Mark's language, investment companies, wealth, service company, trade company are income generators. you might use them as deposit generators. There might be a deposit factory. Your trade company could well be a deposit factory for your investments. And we've passed the asset from trade through the group to the investment company. Hopefully everyone can see that. If you want to due diligence me, you're always welcome to DD me. That dividend is called franked, F-R-A-N-K-E-D, franked investment income. And you'll see that there's no tax on the movement of money. We're all used to paying income tax on dividends. Companies do not pay tax on the dividend. It is franked investment income. Now, that's what everyone should know, and that's what you'll be taught. But there is another advantage. Let's imagine now in our trade company, we've built a block of flats. We took bridging. We need to do that for our new build. Sold 6 of the flats, and we've paid off the bridger. So now the trade company's sitting there saying, I've got 4 flats left. What do I want to do with them? I can sell them. But now the investment company sits there and says, well, hang on a minute, I'll have them. So the trade company disposes of them, and it is disposal at market value. So there is some corporation tax in the trade company. It disposes of them via the group company to the investment company, and there's no stamp duty, providing the investment company sits on those flats for 3 years.
Right.
So we have now avoided stamp duty. Okay, so whilst we talk about cash moving, it's actually assets moving. So I'm going to go back to the next slide. Benefit of the group structure is to pass assets. It could be property or cash, tax-free between the companies. So when do you need a group company? Here we go. I use the word rules. There are no rules. It's me giving you guidance, but it's easier in language just to say rule 1. It's not a rule. It's what I think.
Gotcha.
Okay. As those people who love binary. Mark said it's a rule that. No, I didn't. It's just number 1. Okay. If you want to move money, let's call it money, between the daughters, the subsidiaries, and that's going to happen inside the first year, in less than 1 year, then form a group right from the beginning. Just form your group structure straight away. But you've got to be super quick to want to be able to be successful inside your first year and move the money inside your first year. That's super quick. I have had people who come to me and said, Mark, form me a group with 7 companies. And then 18 months later, they said, why did you let me do that? I can't stop you. I can tell you not to do it, but if you get super enthusiastic, okay, you can have it, but I just don't be too super enthusiastic. Having given you rule 1, you are now expecting rule number 2. Nope. Rule number 3. I'm going to go at number 3 first. So the first one was less than 1 year. This one is, what if it's more than 2 years? But if it's more than 2 years before you're going to move cash, form the group later. And I'll be talking about how to form the group in a moment. How to form it later in a moment. Rule 1, less than 1 year. Rule 3, more than 2 years. Therefore, rule 2 is obviously, well, what happens if it's between the first year and the second year? Then this is all about cost. So form the group later. That's my advice to you. This is all cost management. Benefit analysis. If you now visualize, go back to the original picture, you think about, I've got a group company at the top and I've got 2 daughters, just 2. You have to produce, if you form the group straight away, well, you've got to pay accountancy for all 3 straight away, because if the daddy is alive, if the daughters are alive, so the group is alive if the subsidiary is alive. So you've got to pay costs out to look after these things. You need insurance, you need bank accounts, you need all this stuff, and they've all got costs. So how long do you want to have to pay for the costs of looking after this 3rd company, this group company, if you don't use it? If you don't use the company to start with, and then you insert the group company later. So let's imagine now, hoping you can imagine these pictures. You at the top, you've got 2 companies. Now you want to put a group, and we've got to squeeze a group between you and your other 2 companies. That is called an amalgamation. It's a formation of a group. You must get HMRC clearance. You must. No accountant or lawyer will touch you unless you get HMRC clearance. HMRC clearance is basically go to HMRC, give them all the information and say, have a look at this. Tell me that you're not going to hurt me. Tell the client he's safe. And the HMRC will write you what's called the clearance letter to say they promise not to investigate. That is the clearance process. No accountant or lawyer will touch you on if you're inserting a group into a group structure without a clearance. So go back to these rules, in quotes, rules. All I've done is to say, well, how much is it going to cost for a group company compared to how much it's going to cost for clearance? And that's all I've done on this slide. I know that Sandy, that was a techie. Andy, I know you're the only person that can react to me. Did that make sense? Did
no,
I
it does. Yeah, it does make sense. I think I think in the abstract it makes sense. I think in the real world it would be a lot more complex because there's lots of things to get, sort of put your head around, and you got to think about it's you that's doing it and things like that. But I think in abstract, I understand that completely. Yeah.
Right. The answer is don't try and form a group too quickly.
Yeah.
We can insert the group company later. The chances of you having, say, a trade company and an investment company and making a super profit in the trade company in sufficient time that you can transfer your money inside the first year, yeah, it does happen. Doesn't happen that often. So generally, think about the group later. It's too easy to spend money. Delay the spending of the money. That's really what it amounts to.
Yeah, because I think in the real world, if you're actually doing this, you'd be sitting down with someone like yourself or your accountant, whatever. And you'd be saying, look, this is the sort of structure I'm thinking of putting in place.
Yeah.
This is the sort of things I'm expecting to do. These are the sort of time scales that are going to be, I think are going to be about. And they will give you the advice to say, okay, well, if you're going to do that, then it's probably better to do this. If you're going to do that, then we'll do it this way.
Great. I know I'm messing around with the slides. Bear with me. I am listening to you. I promise.
And I think that's really the whole point of it. It's this is why the concept of getting advice from your accountant in the right at the beginning, at the beginnings of other parts of the business that you're growing as well. As you grow something else, or if you want to start something else, it's better to go and talk to you guys, so they understand. So you guys understand exactly what you're trying to achieve. And as I say, things change. Like they'll, you suddenly come up with an idea and think, actually, I want to go and do this. How does that fit into the structure? And the structure might suddenly change. You might suddenly go, okay, well, if you're going to do that and you think you're going to turn over this in the first year or whatever, then it would be good to put it as a holding company. Put a holding company in there and make sure that you've got sort of securities of that, and you can pass assets from one thing to the other and all those sort of things.
Yeah, I deliberately wanted to put this slide back up. This is a sequential process that we've gone through today about how to think about it. And remember that this was only slide 2. There is a business planning process. You start off by saying, where am I going to go to? Next thing is you're going to do the business plan. So now we're starting to talk about timings. What are you going to do and when are you going to do it? Yeah. So this is the point when you would have made the decision, you would have shared enough knowledge, you would have shared enough information, the accountant would have given you enough knowledge. It's your job to make a decision, not the accountant's. It'll give you enough knowledge for you to try and make a decision and explain it back to the accountant. What decision are you making and when to do things? Now, the accountant will not let you get it wrong. He will let you make the decision, but he'll tell you if he thinks you're getting it wrong. This is where you decide when you want a group company. It's in this early, right? And then your implementation plan, you say, well, no, I'm not going to implement the group right now. I'm going to implement the group later. So that is number whatever on the action list.
Yeah.
This is the point where all that planning of timetable happens. Okay with that?
That's brilliant. Yeah, that's brilliant.
And
we'll get some questions.
That concludes the presentation for today. So I hope it was useful.
Yeah, that's brilliant, Mark, because these are the sort of things we want to clarify. And we've been sort of threatening to do this for quite a few weeks, in fact, probably a couple of months now, to sort of just go into this and look at the structure of business, because it's probably the most important part. The rest of it is part of the structure. The sort of other things you talk about in these lives are really these are little parts of the structure, but this is the overarching way that people will be running their business, and it's really important to get it right from the beginning.
Yeah, just think of the last couple we've done. We talked about dividends and illegal dividends, and when can you take a dividend, when can you not?
Yeah.
Okay, well that presumes so it's the operation of a company. We talked about the training costs and when are they allowable, and they're more allowable in a company. Well, do you want a company or not? Yes, you do, because we've just done the planning process. You really do. Well, fine, let's do that before you spend big bucks on training. So it is at the core of the decision making is to get this lot right.
Yeah, and a lot of the questions we get when we bring this up, bring the sort of tax and sort of things like VAT and everything else up, is this one question: should I do it, as myself, or should I do it through a company? And I think that you've answered as comprehensively as possible.
Well, I hope so. Yes.
This process. So let's leave it there. Thanks very much, Mark. You've been brilliant as usual. really clear.
And my apologies if there was too much passion. Someone did tell me.
Even I understand it, which is, if I can understand it, then everybody will understand it, because I really don't like doing this stuff. I think I put my head in the sand most of the time, but it does make a lot of sense, and I'm beginning to understand the whole concept of it. There's little bits you understand as you go through, but to have what you call this helicopter view of the companies from a sort of a I think is a great way of doing it. And then as you do that, once you've done that, you to start bringing that helicopter down and sort of just focusing on the different companies, how you want to structure those, whether you want to do them as what you call an incubator when you first start. I think is really I think it's quite clever as well, because it enables people to measure the success of each of those businesses and whether they're actually worth doing or not, and which ones to focus on as well. I mean, that's another aspect of it.
Well, it avoids you having to make too big a bet, because the idea of trying to form 3 or 4 different service companies, and it will divert your focus off, and you'll be constantly becoming an administrator, not a doer. So there's so many advantages, but it is clarity. Sorry, I won't do it all again. But it's clarity and having focus and getting the plan and just
Well, brilliant. Listen, we've got a few little questions coming through, but I think we really need to end it at this point. If you could go back and have a look at some of those questions, just see if there's anything that can sort of poke in quite quickly. In that complex. A lot of people saying thanks, and it's awesome, it's brilliant, great presentation, which it is always from you. Thank you very much for that. really appreciate it. So so we're going to have another one with Mark a little bit later on. If you want something specifically to talk about, if you want Mark to focus on something specific, let us know in the comments.
Great.
Until next time, thanks very much, Mark.
Bye.
Bye everybody, see you later.